Welcome back to the Digital Asset Report. Bitcoin is trading near 67,000 and Ethereum is above 2,000 after both hit lower intraday levels on Monday, with Bitcoin touching about 65,000. Equities and digital assets saw a major sell-off last week as tensions in Iran continue to dominate the headlines. The biggest story this week is the latest Senate draft on stablecoin rewards. The language taking shape now would stop platforms from paying users just for parking stablecoins in an account, while still leaving room for narrower rewards tied to actual activity like payments or trading. Congress is trying to draw a line between a payment tool and a yield-bearing deposit account. If framework holds, stablecoins stay useful as digital dollars and settlement rails, but it becomes harder to market them as yield products that compete directly with bank deposits. And the market has already started repricing that distinction. ARK Invest used the sell-off around the draft to buy about 16.3 million of Circle stock, which tells you some institutions still see regulated stablecoin issuers as a long-term infrastructure plays, even under a tighter rule set. Even though the compromise does not mean the bill is finished, the reaction over the weekend made it clear that neither side got what it wanted. The debate has moved beyond whether stablecoins belong in the system. The real fight now is over what kind of financial product they're allowed to become. Meanwhile, the Federal Reserve emphasized in a congressional hearing that it is not working on the creation of a central bank digital currency. Even when pressed about the implications of stablecoins, the Fed representative denied that CBDC was in the works.
But for a lot of people, the number one thing they think about is central bank digital currency. And President Trump issued an executive order saying that there shall be no central bank digital currency, no work on a central bank digital currency. But prior to President Trump taking office this term, there was a lot of work at the Federal Reserve on developing a central bank digital currency. Has that work ceased or is it ongoing?
Yes, I think Chair Powell has spoken to that, and he said that it is not ongoing and that the chair does not believe that we have the legal authority to issue central bank digital currency without some action by Congress.
Well, unfortunately, he always has this qualifier, a retail central bank digital currency. And for a lot of people, what they see being built is like Hydra. There'll be many heads, sometimes in the form of stablecoins, sometimes in the form of other payment instruments, but they'll all come together on the back end with the body of the beast, and it'll be a wholesale CBDC. So is the work on the wholesale CBDC ongoing, or did that too cease?
To my knowledge, it is not ongoing.
Also, Fed Chair Powell issued a sobering reminder that the growing U.S. debt burden is becoming unsustainable. Take a listen.
What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy, and that ratio is going up, and in the long run, that's the definition of unsustainable. The level of the debt is not unsustainable, but the path is not sustainable. And so it's really important that we get back to, we don't have to pay the debt down, we just need to have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit myself to those high-level points which essentially everyone ignores.
Also happening this week, one of the clearest real-world adoption stories coming out of housing finance. Coinbase and Better Home and Finance said buyers will be able to borrow against Bitcoin or USDC held in Coinbase accounts to cover a down payment on a house, alongside a separate Fannie Mae-backed mortgage. Importantly, these credit structures will not have margin calls commonly associated with crypto-backed loans. Over in Washington, the other major structural story is retirement access. The Department of Labor proposed rules on Monday that would make it easier for 401k fiduciaries to consider alternative assets, including cryptocurrencies, as long as they follow a detailed due diligence framework. While this does not mean a flood of retirement account money will enter crypto immediately, it does indicate that traditional pipelines into crypto are growing in scope. And over in the corporate treasury space, Mara made last week's biggest balance sheet move. The company said it sold 15,133 Bitcoin for about $1.1 billion and used the proceeds to fund a repurchase of roughly $1 billion in 2030 and 2031 convertible notes. Mara Mara said the transaction should reduce its outstanding convertible debt by about 30% and capture about $88.1 million in value through buying that debt back at a discount. Over on the risk front, Reuters reported today that Chainalysis found groups linked to Russia and Iran are increasingly using crypto to help procure low-cost military drones and parts. The report said pro-Russia groups have raised more than $8.3 million in crypto donations since 2022, and investigators were able to match some transfers to the exact price points of drones and components sold online. It's a stark reminder that the same public blockchain rails that move value without third parties also create a trail for investigators, compliance teams, and policymakers. Moving over to macro, Treasury Secretary Bessent stated that the U.S. will retake control over the Strait of Hormuz.
But over time, the U.S. is going to retake control of the straits, and there will be freedom of navigation, whether it is through U.S. escorts or a multinational escort.
The takeaway this week is clear. Washington is still deciding how much stablecoin competition it's willing to allow. Crypto is moving deeper into mainstream credit products. Retirement plan rules are opening a longer-term path for access, and the case for on-chain transparency is getting stronger, even in national security work. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.